It is great to have you back here at Coin Lady channel. Hbar and Hbar will be the topics of discussion today, everyone. Anyway, gentlemen, I hope this message finds you well. I hope this message finds you having a wonderful day or night. A small update came out not long ago, and it came straight from the OS Summit. It was DLT. The focus of version 2.0 is on real-world, useful use cases, not hypothetical ones, like monkeys. Now, I understand that most people are kind of mired in a short-term mentality. Our goal in crypto is to generate profits. However, it is important for everyone to grasp the fact that no one can predict what the future holds for Amazon, as we were investing in a stock called Amazon during the dot-com bubble, just in case you forgot. Seems like a book publisher, doesn't it? In the event that our investment in Amazon's shares increases in value by, say, 10%, 20%, or even 100%, we will be quite pleased. I mean, come on, this Amazon stock is just going crazy. I can't wait to get my hands off of it. The item is mine to sell. After that, I turned around and never turned around again. Bam! Just a few years, or maybe even 5-10, down the road. I feel like I owned a piece of that. Now everyone is raving about Amazon. When I was younger, I would randomly check the stock price. Furthermore, I am incredulous. Because the price of that very stock has increased by 1,000%, 2,000%, and 5,000% thus far. I mean, who can say? I see crypto heading in this direction. However, I do not believe that we will have to wait nearly as long as we did after the dot-com bubble burst. In that case, it took around 9 years before stock and cryptocurrency prices began to look promising again. The reason being that utility is likely to be utilized on a large basis. There will be a dramatic reduction in waste very soon after restrictions are in place. And that is why I mention it. Because there are currently a lot of people looking at startups like Hbar in the field, I just wanted to offer it as an example. And all they're expressing is that the price action is terrible. When I can hold Solana or this or that, why would I even bother with Hbar? Additionally, we can already make out some subtle changes in the area. I originally published 2 blogs about this in May of 2023. Nearly a year has passed since then. We are simply waiting for the bubble to pop, as I mentioned before, since one thing is very obvious about these meme currencies surpassing 100 million to 1 billion. Even though I was not around during the dot-com boom, I heard that your backyard shed had a firm worth over $1 billion, and you know what happened to it. When you realize that majority of these tokens are useless, you'll be ahead of the curve. Thousands of initiatives will fail because of this. When rules enter the picture, tokens that add value, facilitate efficient solutions, alter the settlement of monetary transactions, and digitize workflows will emerge victorious. They are the ones who will shape the world in the years to come. Online marketplace utility is important. Just look at Apple, Google, etc. And it happened just recently, in January, following the Bitcoin ETF talks. As I mentioned before, I think the market is beginning to transition from a speculative phase into a much more established one. Let's have a little conversation about it. Furthermore, this may be the second point out by DLT. I see. I also said that Jay Clayton was just on the show talking about Bitcoin spot ETFs. There was just too much washing trading and criminal use of Bitcoin during his earlier stint at the SEC, in his opinion, to have an ETF. Even if Elizabeth Warren and Jamie Dimon were stating the exact opposite using right, it seems that Bitcoin is now safe. Not only will the ETFs generate substantial revenue, but they are also notable since they mark the first occasion that established crypto financial institutions are conducting audits of Bitcoin. This goes against the very spirit of Bitcoin and cryptocurrency, but it was certain to happen anyhow. Industry heavyweights, notably those at Ripple, have forecasted that 2018 will be the year that institutions begin to seriously regulate centralization, which is where my attention is currently directed. Even the United States is getting in on the crypto action, with significant measures pending, or already passed in Singapore, the United Kingdom, Hong Kong, Japan, and Europe. Putting all of one's focus on the short-term performance of ETFs, and ignoring the important aspects, would be a poor choice. Keep in mind that ETFs are a welcome mat for online retailers. The giants have already jumped on the tokenization bandwagon in multiple ways, e.g., with Aberdeen and Franklin Templeton, and we're seeing a deluge of institutional and enterprise players enter the market, e.g., Larry Fink and other traditionalist leaders have practically highlighted tokenization as the biggest thing in tech history on mainstream media. Publications from prestigious institutions, such as Citi, are highlighting the factors that will drive widespread acceptance of cryptocurrency. These people are well informed about the changes that are imminent in the crypto space and expect them to have an impact greater than that of the internet. Furthermore, it will genuinely outstrip all previous innovations. Keep in mind that I completely ignored the fact that this will move along at a much faster pace due to the merging of blockchain with AI. Crypto institutions are embracing this market, which will truly become a breeding ground for amazing innovation and wealth creation. ETFs are just the beginning of what's to come. In the retail industry, positioning is king, and positioning before it's truly too late is paramount. Right now, I'm not concerned with cost. Furthermore, I couldn't care less about the events of the following week or month. I am gazing far into the future. Until, perhaps, the year 2020, this is the most significant chance that will ever present itself to us. Who can possibly keep from squandering the final years? Today, this is still true. On April 15th, there was a major development in the realm of tokenization. On public blockchains, traditional financial institutions are embracing tokenization. Private blockchains are where it is. Public blockchains host it. Why is it a dimension of great importance? Give it some thought, shall we? On public chains, you have these massive organizations that might inject trillions of dollars into the market. In your opinion, how significant does that make the money that drives those networks? Consider it. Hbar is powered by Hades. Hbar cannot function without it. How much do you think Hbar would be worth if Hbar began to attract institutions that tokenized trillions of dollars, and you started to see trillions of dollars flowing and settling through Hbar? Once again, anything similar like this might not happen for a long time. However, tokenization is already beginning to take center stage. There is already TVL available on public blockchains, you know the drill. This pertains to tokenization. Soon enough, the massive flood will be visible in the area. Among the pioneers in this regard, BlackRock was correct. Additionally, they have only lately begun to tap into the Ethereum. Interconnecting devices. Amusing, isn't it? Although it is based on theory, we anticipate that it will have practical applications. Because Ethereum is known to be scalable, we know that Ethereum is not the network's golden egg when it comes to tokenization. Major transactional use cases, or anything of the sort, are not the best fit for Ethereum. This is proven by the fact that a significant portion of Ethereum's dominance has been transferring to other chains, including Dara. In addition to this, though, it was estimated in September 2022 that the value of illiquid assets may be worth $16 trillion by 2030 if tokenized. How about liquid assets that are tokenized? As for tokenization custody, its projected value by 2030 is $10 trillion. Just the illiquid assets and custody services associated with tokenization are worth $26 trillion. Just think about the magnitude of tokenization. Keep this from 2021 in mind now. The World Economic Forum has already highlighted the fact that blockchain technology has the potential to shake up $867 trillion industries. Evaluate how absurd this is. This all starts in 2021, as I mentioned before. So, what's the hilarious part? Among the board members are Larry Fink from BlackRock and Christine Lagarde, both of whom were previously opposed to cryptocurrency, but are now strongly in favor of it. Lagarde herself has wavered between saying that cryptocurrency is good and negative. Crypto is great, no doubt. It's just absurd, isn't it? The markets they were considering, though, were these. These figures have increased to approximately $866 trillion guys today. We've surpassed the $1 trillion mark. Right now. The amount of money that will be impacted by tokenization is something that has been consistently brought up, which is why I bring it up now. Not only that, but the DTCC completely dismantled tokenization, the future of securities, or only a digital fantasy, back in September. Funny thing is, we now know the DTCC is totally committed to tokenization. Why? The reason being that they have only lately got the security. Since this is where they are getting their tokenization infrastructure, they wanted to acquire security in its entirety. Well, that concludes our video. Show your support by subscribing to my channel and giving it a like. Muchas gracias, depart.